Hi, Martin here, and welcome to the Negotiation Dojo. So here's a scenario that's playing out in legal departments who do enterprise deals on AI. And basically, we're in a new era here. There's new application of the law. The laws are kind of the same, but we have new fact patterns, and those are kind of being litigated right now in various courts. So, because we have these new fact patterns using AI, some of the old contracts just aren't working because there are new risks that we're encountering in the law that we want to cover up. And here's a typical scenario. A company deploys an AI, let's say, hiring platform, produces a disparate impact. Basically, when the algorithm does that, that's when a certain group is favored over the other, not because it was planned that way, because that's just the way it happened. And it disfavors a certain group from being hired. Um, and now that company could be facing regulatory action from both on the federal and state levels. And what's the vendor's liability? On a lot of contracts, it's just capped at 12 months fees earned, or even 6 months fees earned. And if you try to get an insurer to do that, right now we're seeing a lot of policies that exclude AI related claims. So the long story short is you absorb, or the company absorbs, the entire loss for everything. There is no help from a insurance company. So some people call this the double gap. Basically, you have two types of exposure: one, no insurance, and you actually don't have sufficient contractual damages because there's a cap. So what we're going to try to do in this video is negotiate or cover that area. So the theory of contract law, and certainly in your contracts, should allocate risk to which party controls it, detects it, can lessen it, or insure it. So that's kind of contract risk allocation 101. Who designs, who trains, who updates the system, that's a fair risk allocation because that person has more control. They can affect the outcome or the damages it'll cause if things go sideways. Second thing, this is very practical. Who has evidence of that, what the system is doing? This would be logs, testing, other things that kind of determine what is going on. And that's generally the vendor, among other things. And what remedy is available to a party? Who can stop it, fix it, defend it, or pay for it if things go totally sideways? So those are the kind of allocations. Who controls it? Where do you get the information, the evidence of it, and who actually can make a remedy? So the big thing is, don't negotiate the clause until you understand what can go wrong. What's the failure mode? What we're seeing across our desk are a lot of generic software as a service, SaaS, if you will. SaaS is the acronym. Templates that just don't fit. So if you're using a SaaS template, you have got to reality base that for what AI is, and it is different than SaaS fundamentally. The next area, once you look at that basic risk allocation and understanding who controls it, who can remedy it, is this idea of data rights and where the data goes. This is really important because the European Union, certainly California, and handfuls of other states are starting to regulate this. And there's a few federal agencies that do, but we don't really have that global privacy laws like they do in the European Union. So the issue with one definition that's currently everywhere is this concept of customer data. So that probably should be redefined. Define that customer data broadly. It can include prompts, outputs, embeddings, metadata, usage patterns, feedback, and derivative data based on other data, because we can tell a lot about a customer even if we don't have personally identifiable information. We can really profile them very accurately now. So to unbundle these types of data, a lot of in the AI community, especially the frontier enterprise deal makers, they want to collapse everything into one sentence, but unbundle it. And there's probably three typical areas that I like to unbundle this concept of customer data, on what the protection level will be. So we want different protection levels for different data. For example, if they're using the data to provide the service, that's necessary, that's fair, billing, credentials, stuff like that. That's data that they will need to function, or if you don't have that data, you don't really have a way to interface with your customers. That's obviously. The second group is customizing the data to your environment. This is generally negotiable, and if you are negotiating that as a purchaser of AI enterprise services, you want it to be purpose limited. For example, you can customize my environment for this generic thing, and that type of data is, I'm willing to give up some absolute privacy. But if you're into like trade secrets and a little bit deeper, you probably want to put a corral around that type of data in the contract to say this data has essentially a higher level of practical things. So use of that data in later versions of that AI, may be something you want to curtail. And probably the third most serious level that we're seeing a lot of, including a lot of trade secret misappropriation, is using the data to generalize and train models that benefit the customers of the AI service provider. This requires a very express negotiation, because you may not want them to customize something. If I'm in the peanut butter business, customize everything that really works for peanut butter manufacturers and hand that over to my competitor. If they're going to use my AI data for that, I may want some ability to generalize it, so it can't be used, weaponized against me, which is, again, that's a negotiation. This is a negotiation dojo. That's something you're going to have to practice. So what we see in these, I guess, first level of all AI providers is they have this general broad thing that's why we want to disaggregate it, is to provide and improve our services. You see that for everything. We can use your data to provide and improve our services. You really have to chop that up to those three different categories. What's used to provide the service, what's used to customize, and this generalized training environment. Those are the three things that we have to disaggregate that provide and improve our services, which you see the mashup, and that's a very long leash. You essentially have no control over your data. No training clause. You can't use my data, my input, my prompts to train the model. But what you want to do to drill down that, if you're negotiating one of these deals, is actually enumerate, disaggregate those activities. No training, I get that. But what about retraining? What about fine-tuning? What about validating data? What about like these peer review functions you're seeing? What about, improving across vendor systems and, to model the provider system? So there's a lot of disaggregation we really have to do when we're trying to unbundle this no training distinction. And there's one more thing I'm seeing, and that's this, we have no training and no retention. You see that even if you're a subscriber, generally the free, none of this really applies to anyone using free AI. You should have no expectation of anything. If, as the old saying goes, if the service is free, you are the product. So there getting data from you, but this is for enterprise deals, subscribe deals. We see this no training, no retention. So for larger customers, you can negotiate retention, caching, indexing, and human review of data. Otherwise, that data will live on in ways we don't know because we're not the custodian of that data, beyond the no training and no retention thing. So how does that data live on? You have to be very specific. This idea of liability caps, we kind of opened with this in our discussion, but this is the money section. So what we want to do with this liability cap section is build an architecture that helps us engineer liability as it actually occurs. So the vendor's opening position is almost always liability capped at 12 months fees. And of course we always carve out for fraud or gross negligence, but that's more intentional conduct that's beyond the contemplation of normal business transactions. Someone has really got it screwed up for those things to occur. So, and they're unknowable, and to ask someone to cover an unknowable risk is seen a little bit difficult. A lot of people get sucked into the wrong battle. They're on the wrong battlefield. What do I mean by that? They're talking about 12 months. Let's cap it at 24 months fees paid for a cap. That's just the wrong negotiation. You don't want, that's the wrong negotiation. So you need 3 different caps, and they do address that unknown cap for fraud. So there's a general cap. This is like routine contract claims. That may be totally appropriate to do for your 12, 24-month cap. The next cap I'm going to call a super cap, or I don't call it. Someone told me that, and I thought it was a cool word, and maybe they heard it from somewhere. It's very common in the industry, but let's call this super cap. So these are multiples of fees or a fixed dollar amount. For example, 3 times the amount paid over this period for pretty serious activity. And this is where you disaggregate. So the first one, general cap, contractual claims. Here we want to drill down a little bit. We want to talk about data misuse, security breaches, confidentiality, and defined AI claims. Contracts are getting better. Insurance contracts are getting better at putting a corral around what's an AI claim and what is available there. The next tier is uncapped, and this has to do with those unknown risks that are more intentional. We're talking about fraud, willful misconduct, and certain indemnification provisions. For example, IP infringement. For example, for a registered copyright, statutory damages alone, not actual damages, statutory damages are somewhere between $750 and $150K, $750 and $150,000 of damages. So you really do want to think hard about the concept of I kind of want an uncapped tier. Certainly it's IP. Certainly it's for fraud, willful claims, anything intentional. If they're really trying to do bad stuff, we don't want them to get off the hook with a cap. So once again, I have the general cap, I have the super cap, and then I have the uncapped tier. This is a way to disaggregate that ridiculous or inappropriate at this level for AI, because it's such an unknown risk, on what we want as far as arguing over this. Is it 12 months or 14 months cap? No, that's a wrong approach. We want this general cap, super cap, and uncapped tiers. Once you agree on the cap, let's talk about this idea of indemnity, and then I do want to talk about insurance and what we're seeing in insurance policies for AI. One is this concept that most vendors offer an output indemnity for copyright claims. This is based on the Microsoft ChatGPT cases that are being litigated, New York Times case, things like that. And it sounds great, but let's go a little bit deeper to see what we're actually seeing, like the new lawsuits that are being filed right now. The coverage excludes infringing inputs, modifications, and these output claims usually are subject to general liability caps. So an indemnity trapped inside a 12-month fee cap is worth exactly 12-month fees. That's why we want to really think about the grant of indemnity right and what's excluded, the damages waiver, and the cap all as one part of that clause. I received a contract the other day from a client who it was written by an AI, and they said, "Oh, just review it," thinking it was a pretty good contract, but it actually had an indemnity provision with everything except what they call tender mechanics. Tender mechanics, when you receive notice, what happens, what the parties do. The push to indemnity beyond IP should be tied to vendor-controlled failures, and they're kind of that middle tier we talked about earlier. Data leakage, prompt injection, I think that's what they're calling it now. Prompt injection, I want to say that. This is super important with agentic AI because we have seen cases where, and they're in the news, where agentic AI has kind of exceeded its scope of authority of what it can do, and has done things that seemed pattern matching for the AI, but breach individual rights or rights of others and destroy data and do all kinds of mayhem. So you have a limit, you have the indemnity, but what about the party's ability to pay on that casualty? Because if they are undercapitalized, they may not be able to pay for the liability, and that's where we have to talk about insurance now. So I was at a CLE the other day of all the new International Standards Organization ISO endorsements that came in effective after January of 2026. And what these endorsements do, they let carriers exclude claims, quote, arising out of, unquote, generative AI from general liability policies. So courts read, quote, arising out of, that quote, arising out of, broadly. So any causal connection can be enough. Which means they want to basically not insure against AI stuff because it's an unknown risk right now. It's an unknown risk because we're seeing new and innovative claims and new innovative perceived bad behavior and new and perceived actual bad behavior. So with the ubiquity of AI everywhere, we really want to look at this issue with those similar exclusions that run across all policies. Right now, director and officer policies, errors and omission policies, malpractice, employee behavior policies, practices, employee practices policies, and cyber insurance. You're seeing very broad arising out of language, and that's a problem, and that's something to talk about with your insurer on how you can cover that gap, because it is a gap. They will not insure with that broad language. So the standalone AI market exists now, but limits generally top out. One report I read was something like 50 million against potential 9-figure losses, which isn't going to help anyone. So know this area is underinsured. A lot of the majors are really not covering it, and you really have to find an insurance professional to really that you know, like, and trust, who can really tell you exactly what's going on with his policies and what's available, because a major carrier should say, hey, we don't do that risk, but there's this one little company that's insuring it, and they're adequately capitalized because they've figured it out and they know what questions to ask, so their actuaries feel good about covering that risk. So I guess two action items on this insurance segment I want you to take away with is, first, audit your insurance program, how you get it. I talk to a lot of clients who are they don't know where to start with a new technology to get insured. Not just corporate general liability, but map each AI use and coverage up to any gaps you may have in that policy. So the good is, your older policies, if you have a multi-year contract, your older pre-exclusion policies still respond to AI claims. So look at those too. These new ISO standards are a little more, tightening up. Secondarily, verify the vendor's insurance that they actually have it, and how they respond to AI service to back their indemnities. Because an indemnity backed by a policy that excludes AI is an unfunded promise. So you want to make sure that a lot of times, especially with large procurement projects, you see these RFPs go out, request for proposal. Look at those policies, request what type of coverage, and make sure they're covering these gaps. So in this whole contracting area, there are must-haves you want to be sure of. That's the data definitions on what those prompts are, those disaggregated definitions. Think about giving away generalized training, and think about security in meaningful ways. And think about the trading of, okay, we have the basic cap for contract breach, then we have this mid-tier, and then we have that super cap. What's the higher? And then the super cap and the unlimited would be the third tier, where it's fraud, it's intentional contract. So you have the basics, you have the super cap, and then you have the broad. So don't negotiate the clause until you understand what the failure mode could be. If you're offering a service, including a chatbot service, we have now product liability cases that have been ruled on based on products liability, not on any new AI legislation. These are old laws. So the old laws still apply to new technologies. And what we're trying to do is negotiate clarity around those to limit risk and to give you some ability to navigate this new area of law. As always, nothing in the Negotiation Dojo is intended to be legal, financial, medical, or psychological advice. Talk to a professional in your jurisdiction to help out if you have questions that require professionals. This is informational. It's not to help you practice law or attempt to practice law. Thank you so much.